Hey, this is Greg. This video is about Exxon's historic record earnings and answering the question, after its enormous run-up in the stock, is Exxon Mobil still a buy? So let's go into my secret lair control center and answer that question, shall we? Oh, a doggy. What do you know? Okay, so now I'm where I need to be, so let's get right into it. So Exxon announced their record quarterly profits for the third quarter, and it was nothing short of unbelievable. Exxon racked up nearly $20 billion in Q3 of profit. It's the most lucrative quarter ever. And in addition, to add another basically cherry on the top of a wonderful quarter, they raised the dividend from 88 cents to 91 cents, giving shareholders even more money. Third quarter net income totaled a record $19.66 billion, or $4.68 a share, jumping 10% from the previous quarter of $17.9 billion, which also set a record at the time. Earnings were driven by record refining volumes, strict cost controls, and natural gas prices, which offset lower crude prices and weaker industry refining margins. Third quarter revenues also surged 52% year to year to $112 billion from $74 billion in the year ago quarter. Exxon said it achieved the best ever quarterly refining throughput in North America and highest globally since 2008. Cash increased to $11.6 billion to reflect the cash balance of $30.5 billion at the end of the quarter, with free cash flow of $22 billion and a debt to capital ratio of 19%, just below the low end of the company's target range. These results are simply amazing. So it was a bang-up quarter for Exxon. All shareholders should be extremely happy, but the question really is, where are we right now in the cycle, and is Exxon still a buy, and is it something that you want to continue to hold, or have they achieved peak earnings, so to speak, as many of the pundits talk about? And is it time to start either selling or starting to lower your exposure to the energy sector? Here's the year-to-date chart, but before we dig into that, let's take a look at what the analysts are saying. Here's a screen on what the analysts are basically saying. It looks like most of them are either neutral or bullish at this point. If we take, they have an average price target here of 115. We're currently at, a little bit below that. But if you look at the various analysts here, you can see this guy's got a hold, this guy's got a hold, this guy's got a buy, hold and buy. So it's kind of mixed, as you would expect. The price is quite extended, so it looks like the analyst community is mixed on this, with either a hold or a buy. Going back to the stock chart, you can see just the really remarkable performance on this stock. Year to date, if you look at, going from January to where we are now at 110, it went basically from $61 a share to 110, which is an 80% year to date return. Very strong return, and almost too good to be true if you think about it. Let's go back 3 years. This is when I first recommended it at the height of COVID, March 2020. The stock was selling at $33 a share when I originally recommended it. And since then, if you take it from there, $33 a share, up to where it is now, which is about 110, that is a 230% return. One of the best stock recommendations I've ever made. Okay, so nobody can complain about this stock if they've been in it for the last couple of years. I originally recommended it, as I said, back in March of 2020. I took a very big position. I built it up over time. My cost basis is probably around 50. I am extremely happy right now that I did this, but I'm constantly thinking every day, should I be looking at reducing my position, or should I be looking at selling? Okay, so that's what we're going to talk about for the rest of this video. Now, as I look at where we've come with this stock and where we are right now, there's really 5 areas that I focus on, and I want to go into those right now. The first one is what I see as the structural supply-demand imbalance, and it is a worldwide phenomenon, not just in the US, and you do, in the oil and gas sector, you do have to focus on the international market because it is truly an international business. I believe that there is still a structural supply-demand imbalance. This is due primarily from years and years of ESG philosophy in many of the funds that you see. There has been a decided lack of capital going into oil and gas exploration, and this has been going on for at least 10 years. This has resulted in the supply, one of the reasons why we have seen this supply-demand imbalance that we're currently seeing. Also, secondarily, OPEC. OPEC just decided they're going to essentially cut another 2 million barrels per day from the market. Some of their members were already not producing to capacity, so the actual impact is somewhat less than this, but still, this is a big factor in what we're seeing. Also, I think China's zero COVID policy and its associated economic impact on China is affecting demand negatively. And once China comes back online, I think you're going to see a pickup in demand, which is going to further exacerbate the problem. The second issue is geopolitical risk. It's no secret that the war in Ukraine, brought on by Russia, has caused a severe supply problem to largely Europe. They became very dependent on Russian oil and gas. The embargo that's being implemented by Europe starting in December, January timeframe is going to cause further pressure on supply. I believe with the United States and Europe basically funding this Ukraine war against Russia, this situation is not going to end anytime soon. And if anything, and I've expressed these concerns on other videos, it could escalate, it could go nuclear. Nobody knows what's going to happen, and I think this is an enormous risk that's going to continue to put pressure on oil and gas prices. Third is a domestic political situation. Okay, I've spoke extensively about this on the channel. Biden declared war on oil and gas the second he took office. It has, despite the rhetoric where he tries to claim that he's not doing it, he's doing it. The oil companies have responded by saying we're not going to invest any more CapEx in drilling while the government takes this position. Even if the Republicans take control of both houses of Congress or one house, whatever, while it might improve the situation, I don't think it's going to change things materially as long as Biden is in there. He can always veto. I don't think they're going to have the votes in the Senate to override a veto. So for at least the next couple of years, I don't see anything changing on the domestic front. And I think that also will keep pressure on the supply and demand situation. Next thing I look at is valuation. Okay, this company is not extended in terms of its stock valuation. It just simply isn't. The EPS is still less than $9 a share. Okay, that's well below the market EPS in the S&P of around 17 times earnings. And while oil and gas companies have historically traded somewhat lower than the overall market, it's still selling at a large discount to the market. Everything you can look at, price to sales, it's around 1 times, selling for 1 times sales, which is absurdly cheap. If you look at price to book, it's 2.43 times book. If you look at price to cash flow, it's selling for like 4.3 times cash flow, which to me is still relatively cheap if you compare it to any other industry. So I think from a valuation standpoint, it is not extended. The price of the stock is somewhat extended, or I would say very extended at 110. So we'll talk about entry points later in the video. And the fifth and last point is financial situation of the company. The company is in extraordinarily strong financial position. It's got $30 billion of cash on its balance sheet and only 19% leverage. This is crazy. This is a crazy unlevered company that is just spewing cash right and left. And all of this cash and earnings that's coming out of this company is all accruing to the benefit of the shareholders, which is you and me. And along these lines, they have reaffirmed their commitment to do a $30 billion stock buyback program, which a little while ago was roughly equal to 10% of their market cap. Now it's less because the stock's gone up. But in addition to that, they increased the dividend to 91 cents a share. So now you have like a 3.3% dividend yield on the stock as an added benefit. So all in all, I still like this company. I love the oil and gas business. Until these fundamentals that I talk about change, I'm still going to be long oil and gas. In fact, I've been a real estate investor. I've been a stock investor. There's a lot of distress going on right now, beginning in the real estate business. I just said to somebody else the other day that I'm more excited and more bullish on oil and gas than I am on any other asset class. And until the fundamentals in the supply-demand situation change, that is where I'm going to continue to put my money. So I clearly still like the company and I still like the industry, but the question is the stock an attractive stock investment at these prices? I would say that the price now at 110 is very extended given the trading range. Just really a few weeks ago, it was trading at $85 a share. So these oil and gas companies are very volatile. They go up and down. I would not go in here because the price is extended. If we wait a few weeks or a month, it could be back down to 85. And then I would be on the channel here recommending that you go in. In terms of an entry point, you can see here the price is very extended. I would say in terms of entry point, around $95 a share down to $85 a share, which is down in here. And you can see at the end, third week in September, that's where it was, which wasn't that long ago. So anywhere in here, I think you would be very happy with your purchase, increasing your exposure in this range, $95 to $85 a share. Okay, well that's where I'm coming out on Exxon Mobil, one of my favorite stocks right now. I thank you for tuning in, and if you got value out of this video, please like and subscribe, because I'd love to have you on board for future videos, which will be coming out very soon. And until that point in time, thanks for watching, and I'll see you on the next video.